Welcome back. Hopefully everybody's doing well. And now we're going to be hearing from Tom Lee. But more importantly, we're going to really try to understand in today's video where we should be investing, what cryptos we should be buying, because we are now, in my view, 2025 is going to mark the end of the bull market for this cycle. That doesn't mean we're not going to have pumps. That doesn't mean we're not going to have bull thesis throughout the bear market or throughout 2026. We potentially will, but first we have to go through a little bit of a correction. And this is a great opportunity to kind of take a step back and go outside of the whole Bitcoin treasury thesis and stop talking about Michael Saylor and MicroStrategy for a hot minute and understand what else is going on in crypto, because there is a lot going on. And this whole Ethereum strategic reserve expansion with Tom Lee and others getting involved with converting these companies into Ethereum treasury companies. This is just a little example of essentially the rest of crypto getting the attention that it should deserve and that it should get based on the technology, based on the use cases. And in today's video, we're going to be exploring outside of Bitcoin, outside of Ethereum, what else should we be investing in? And I'm not going to be telling you exact cryptos. I want you guys to figure this out on your own, because really what we understand about Bitcoin and Ethereum is these are the infrastructure layers for crypto. Bitcoin is the hardest store of value there is, with very little overhead compared to like real estate, which historically has been one of the best investments for the majority of people. But now, with property taxes and overhead and costs and utilities going up, a lot of people are moving back into other assets that don't have high overhead, but do go up and to the right over time. And a lot of that has to do with what is being built within the crypto ecosystem, because it's not about the cryptos or what companies are buying individual cryptos. It's what these cryptos are capable of. And so in today's video, we're going to be exploring the DeFi world. We're going to be exploring the real world assets ecosystem, and we're going to understand where we should be investing and preparing for the next cycle and potentially even making money in the bear cycle. This is the Cryptoviser podcast. We talk about everything crypto, blockchain, and investing every single day of the year. So make sure you guys are subscribed. Give this video a free thumbs up, because you guys know crypto is not free, but thumbs up are always free. If you want to help support the channel financially, click the join button or subscribe plus button down below to learn more about becoming a channel member for as little as $1.99 a month. Thanks to every single one of our channel members for all of the support. And if you can't afford it or just don't want to join, at least give the video a free thumbs up. Now we're going to be starting right here, because effectively what we know is Ethereum is becoming the foundational layer, the infrastructure layer for blockchain. And so if Ethereum is the infrastructure layer for blockchain, what else does this mean for the rest of crypto? What does this mean for Ethereum? And what does this mean for the desire to acquire as much Ethereum as possible? Because we're seeing that occurring within the traditional financial ecosystem, with all of these different stocks continuing to buy more and more and more Ethereum, similar to what MicroStrategy is doing with Bitcoin. Let's listen to what Tom Lee says here in a recent interview about really kind of how he feels about the market. We're going to be playing this 1.25 speed. Give the video a thumbs up while we're watching, and let's listen in to Tom Lee before we get into DeFi and real world assets. And the volume was off. My last video, the volume was on, and I had to re-record the whole video, but now it's off. So now we're correct. Let's listen in.
I'm still really bullish on Bitcoin. I think between now and year end, I think it's still possible to be 200,000.
He's saying 2025.
$1 million for Bitcoin. Ethereum, I think, has more upside because and that's why we call it the biggest macro trade over the next 10, 15 years, because of both Wall Street building on the blockchain and AI as well. So you have like sort of two cohorts actually probably deciding that it's really additive, right? Remember, the financial system is half of the economy. And in the stock market, financials are trading at a lower valuation than tech. So I think financials can re-rate in that world. But Ethereum is sort of the network value beneficiary. So I think Ethereum, between now and year end, so let's say Bitcoin is 2x upside from here. I think Ethereum is more than 2x upside from here. But longer term, in the BitMine presentation, we pulled some work from Mosaics, and let's say it's 5-year view for Ethereum, it comes to around 60,000.
Now, here's the deal. He's saying $60,000 price for Ethereum in the medium or longer term. And I would agree if everything that we're about to discuss actually does roll out and actually does expand. Because at the end of the day, Ethereum is the infrastructure layer for all of crypto. It connects a lot of the different blockchains. It houses a lot of the data for other blockchains. It can create the interoperability in the DeFi ecosystem that has been time tested. And so when you think about like a city, right? The city is just the land. It's just the geographic location. But everything that builds on that land in that city is effectively the infrastructure, right? If you think about major cities like Miami, Chicago, New York, maybe even LA. Although LA is a little bit different, I would say more like Texas, like Austin, Texas, where you have these major financial hubs and everything builds up, right? Think about it. Buildings, they go up. And so they're building vertically on top. And think about one piece of land, one city. You can have 35 banks. You can have 14 credit unions. You could have 100 restaurants, 50 different hotels, and it's all on one plot of land. Well, in crypto, in blockchain, the plot of land is Ethereum, and things are building on top of it. And even though you have other ecosystems like Solana and Sui, and we're going to get to that in just a minute, these other ecosystems are still reliant on Ethereum because Ethereum is where most of everything is built. You can see that on DeFi Llama, right? On DeFi Llama, most of DeFi, all of DeFi locked is about 154 billion. Now, if we dive into Ethereum, it's 92 billion. So it's like basically about 60 to 65% of all the DeFi is living on Ethereum. And a lot of this is interoperability or interoperable decentralized finance. So the money can move from Ethereum to Solana, from Ethereum to Coinbase, from Ethereum to Bitcoin, but it lives on Ethereum. So Ethereum is effectively that base layer of this new ecosystem. And this is exactly what Tom Lee is talking about. And this is why he believes that the price is going to go up and has a more of a macro trade than Bitcoin. Because Bitcoin is a store of value, but it can't really do anything. We've seen this. Even the Lightning Network has not really picked up any steam because it's still very limited. And so now we're seeing other ecosystems trying to build on top of Bitcoin, right? We see Internet Computer building Bitcoin DeFi on top of the Bitcoin layer, on top of the Bitcoin stack, because Bitcoin can't do it. But because Internet Computer can interact with Bitcoin, Internet Computer can kind of be that bridge or that second layer to Bitcoin, similar to how the Lightning Network is a second layer. It's built on top of Bitcoin. But Bitcoin has limited kind of programmability compared to Ethereum and these other chains outside of Ethereum. So yeah, this is exactly what Tom Lee is saying. Now let's listen to what Tom Lee says here, because again, this is going to lead us up to what we should be doing for 2026 and 2027, because we have to prepare now. We have to buy now, or at least know when or what we're buying, so that when those buying opportunities come along, during a dip, during a bear market, during peak fear, during collapses of companies that are connected to crypto, those events are the events that we want to buy. But if you don't have a strategy or plan ahead of time, those events will come and go and you'll miss it. The same thing that happened at FTX collapse. Almost every other YouTube channel here on YouTube, other influencers on other social media, everybody was so focused on, oh my God, FTX went down. Is Solana going to go down? Is Grayscale going to go down? Is Binance going to go down? Everybody was so focused on FTX collapsing. And what were we doing on this channel? We were buying the market at the market bottom, $15,500. Anyway, Tom Lee says here, Wall Street is about to build their entire infrastructure on the blockchain, and the blockchain they've chosen is Ethereum. This is a very powerful statement, right? Because in some ways, Tom Lee is Wall Street, right? He is what he's talking about, because he is the chairman of BitMine, which is buying Ethereum. But he is very well connected. So the fact that he's saying this doesn't surprise me. The fact that he probably knows this doesn't surprise me. And the fact that he's taking action by then going and becoming chairman of an Ethereum strategy company follow the I don't know, the green bricked road straight to the cash, because Tom Lee is letting you know what the rest of Wall Street is already planning. Let's listen to what he says here. We're going to play this at 125 speed. Make sure you guys are subscribed to the channel. Give the video a free thumbs up. We upload every single day, so make sure you check out our other videos as well. And I'd love to hear your opinions on this whole conversation about where to invest for 2026 and 2027. Let me know in the comments down below. But in the meantime, let's listen to Tom Lee.
On Ethereum, and Ethereum itself is 100% reliable. It has not had a single moment of downtime since inception. It's one of the few blockchains that has never been down. And then if you needed to do more things on Ethereum, you can build what they call layer 2s on top of it. So Ethereum is essentially infrastructure that now is catching the attention of two industries. The first is the financial sector. The stable coins became really viral, a breakaway product for crypto. And that's like the ChatGPT moment. There's $250 billion worth of stable coins. The vast majority of those are minted on Ethereum.
Yep.
Then the genius.
Now I'm going to pause here for a quick second because I want you guys to see. Now we're going to be coming back to this in just a minute on this video. Visa, the credit card payment company. Keep in mind, Visa, MasterCard, American Express, these are all payment networks. They're effectively doing the same thing that blockchains are doing, just in a controlled manner, and they've perfected it, right? They have very, very fast speeds. You swipe your card, it's instantly approved or rejected. But they even have a stablecoin dashboard here, okay? In the last 30 days, this is according to Visa's own info. This is visaonchainanalytics.com. Just in the last 30 days, $5 trillion in transaction volume on stable coins. So this is actual money moving around to the tune of $5 trillion in transactions. So people who say, well, crypto's not real, this is not real money, stable coins not real money, show them this chart. Show them this dashboard. I don't know how much clearer this can be to people about where things are going. At the end of the day, there's a large cohort of people, I'm specifically talking about the US, but I'm sure it's happening all around the world, that are completely unaware. Like they may know about crypto and blockchain and the technology and that, things are advancing, but I don't think that they fully understand like at what level this is at, right? Like this is going to be integrated in every transaction that you interact with. Stable coins, real world assets, tokenization, decentralized finance, yield generating products. And it doesn't matter whether you like it or not. Like this is the future. This is where things are moving. And so you can either be skeptical about it or invest. And all investing is a risk. But do I want to invest in Coca-Cola Company? Or do I want to invest in the future of technological finance? I mean, Warren Buffett's company clearly wants to keep investing in Coca-Cola and Geico Insurance. Personally, I think the future is here because this solves a lot of the problems. It solves a lot of the anti-debt or anti-money printing situation that's going on and going to continue to accelerate. You guys have to remember, the baby boomer generation is moving on, right? A lot of them are, that was the big generation. We don't have, the younger generations are not as big as the baby boomer generation. So that whole generation leaving is creating a supply-demand imbalance because we still have all these businesses. We still have all this money flowing. But now we have less hands, less people interacting with it. And so the money printing is going to accelerate. It's already accelerated. Since I started this channel, the US debt doubled. When I started this channel in 2018, we were at $19 trillion in debt. We are now at $37 trillion in debt. Okay? I mean, it's not going to stop. And so watching the banks watching the payment providers like Visa, seeing Wall Street like Tom Lee, getting into crypto, getting into blockchain infrastructure. They're telling you everything you need to know about where to invest. Let's continue listening in.
Act was passed by this administration and this Congress.
Genius
and
Act.
that greenlighted the proliferation of stablecoins onto the blockchain. So banks are now building stablecoin products. That
Straight from Tom Lee, guys. Banks are now building stablecoin products. People say, but Cryptoviser, I don't know if crypto's safe. JP Morgan created multiple blockchains and they have a JPM coin. I mean, guys, I don't know how much clearer it needs to be. People put their money in a bank, get zero in return, and maybe they get fees charged to their account, so they actually get negative in return. And they don't care. They don't want an alternative. The alternative is crypto. The alternative is stable coins. The alternative is yield generating assets. And they don't want it. They're like, well, I don't know if it's safe. And I get that. But you have the largest banks in the world building their own blockchain, stablecoin, cryptocurrencies, and letting customers interact and hold these assets. You don't want any exposure to it. I mean, most of my viewers, I would say 100% of my viewers do, and that's why you guys are watching these videos. But think about friends and family and people who may have inheritance coming and then they just don't do anything with it. It's the same thing like people win the lottery and then they're broke within 2 years. They spent all the money. They didn't invest anything. They didn't think about their future. They didn't think about the future of the money and protecting that financial safety net. Like, it's going to become much, much harder as they print more. And your $50,000, $100,000. I was actually looking at like jobs recently, like job postings, and I was surprised. Like majority of like the six-figure jobs that we used to think about, they're only making $100,000, which sounds like a lot, but based on everything else inflating, now a lot of tech jobs, like the newer tech jobs, they're paying $200,000, $300,000, $400,000 base. And that got me thinking, like somebody who's making $100,000 thinks they're making a lot of money, but if the price of everything has doubled over the last 5 years, technically they're still at $50,000 in purchasing power. They may be making six figures, but now all these new IT jobs are making $200,000, $300,000, $400,000 a year base. And so the new six figures is potentially seven figures, which is pretty amazing to think about. But it's going to continue to accelerate. So being able to offset the inflation, offset the money printing with another asset is critical, right? Coca-Cola stock is not going to do it for you. Just not going to do it. It's not going to outpace the rate of money printing that we're seeing. Anyway, let's continue listening.
Treasury Secretary Besant thinks that could get to $4 trillion. That's exponential growth, burning gas on Ethereum. And then we have Project Crypto, which is the SEC wanting Wall Street to build on the blockchain. Now, all of that collectively, from a Wall Street perspective, is like 1971 for the dollar. And what I mean by that is, in 1971, the dollar went off the gold standard.
Yep.
So in 1971, the dollar became synthetic.
Yep.
And gold was what people bought as a hedge against that synthetic dollar. So you had gold as the trade, and that would be the Bitcoin equivalent. But actually, the synthetic dollar is what created the rails for Wall Street to build all their future products. The futures, curves, derivatives were all because the dollar was a synthetic product. If the dollar was backed by gold, Wall Street would be still a very small business. Well, Wall Street now is going to be building its entire infrastructure onto the blockchain. And the blockchain they're choosing is Ethereum. So this is the 1971 moment where Wall Street is essentially capitalizing on tokenizing the entire world onto a blockchain. That's a huge opportunity.
And I would agree. And that is what this video is about. They're all going on Ethereum, or they're going to touch Ethereum. So even if it's not directly on Ethereum, granted, there's going to be a lot of competition. There's going to be a lot of competing blockchains. But right now, everybody is focused on Ethereum. Tom Lee said, for those wondering whether stablecoins are using Ethereum, well, yes, the supply hit a new all-time high. And listen, stablecoins are the most boring thing. I've said that on multiple videos. They're the most boring thing in the world because there is no real value to it, right? It's just a dollar. But stablecoin usage and growth tells us a bigger story about what's being put on chain, the tokenization, the merging of blockchain with TradFi and DeFi, traditional finance, decentralized finance. And now Ethereum Foundation's near-term user experience priority is interoperability. And why is, I mean, first of all, Ethereum is the most interoperated blockchain, but they want to interoperate even more from a user experience standpoint. And so Ethereum researchers have highlighted that interoperability as the top near-term priority for development. The researchers wrote in a blog post, "We see interoperability in related projects presented in the note as the highest leverage opportunity within the user experience domain in the next 6 to 12 months. The near-term strategy focuses on intent-based architecture and general message passing." They say, in other words, the focus is on allowing users to express outcomes or intents while the network handles the low-level transactions and upgrading the cross-chain pipes so that new intents execute smoothly across layer ones and rollups. Ethereum Foundation states that it will optimize for specific metrics, including time to inclusion, confirmation and finality, layer 2 settlement, and signatures per operation. The researchers wrote that interoperability is a focus because the Ethereum ecosystem is divided into many layer 2 protocols that extend its functionality and scalability while bringing their own challenges, chief among them the pressures of fragmentation or division, right? The post cites a significant pain point, saying at its simplified core, the key ingredients to accelerate interoperability boil down to unlocking fast cross-chain message passing and standardization. Currently, message passing is partially bottlenecked by slow settlement times. And so this shows you that Ethereum is setting up to make the user experience better, faster, and more easy to use, I guess you could say. And this is where tokenization and DeFi are merging. Solana treasury firm DeFi Development Corp expands to the UK and plans further global launches. Now, we're seeing a lot of these treasury firms launching in the US and around the world. This is in the US, it's not that big of a deal. Okay, they're just buying crypto and putting it on their balance sheet. But in other areas of the world where they may not have access to crypto or regulated crypto exchanges, and they may just like the stock market better, these treasury firms expanding overseas allows more people access to these products, more people access to infrastructure plays. And I would imagine a lot of these treasury companies, whether it's Bitcoin, Ethereum, Solana, or whatever, that eventually they're going to take the funding that they have, the money that they have on their balance sheet, and put it to use, taking out Bitcoin or crypto-backed loans or buying real estate with, the collateral of this crypto. That way they can start becoming cash-flowing businesses. But again, the idea here is expanding the access to these products. So whether you're buying Solana directly or Bitcoin directly or through the treasury company or through an ETF, there's multiple different avenues to play the market, similar to what Tom Lee was just saying about the 1971 moment, where when they took the dollar off the gold standard, it allowed Wall Street to create all these derivatives on derivatives on derivatives on derivatives. And that is very exciting. And by the way, Tom Lee said in the previous video, I'm not going to replay it, but Wall Street is about to build their entire infrastructure on the blockchain, and they've chosen Ethereum. Well, this is underway as we speak. And by the way, if you're up to this point in the video, make sure you guys are subscribed and also give the video a free thumbs up, because we try to provide you with the latest information on crypto, blockchain, and investing, and give you guys my unbiased analysis. Nothing I say is financial advice. These are just my opinions. And that brings us to real world assets, because this is merging blockchain and traditional finance. What are real world assets? Real world assets are tangible assets existing outside a digital spectrum, which can be tokenized and brought onto the blockchain. So stablecoins are real world assets, right? They're dollars, like actual dollars, minted by the Federal Reserve. And then they're put into a digital form. So for instance, USDC, which is one of the largest stable coins. This is issued by Circle. So Circle holds the dollars, and then they issue a USDC on chain. So they're taking a physical thing and creating a tokenized version of it. That's what tokenization is. That is what real world assets is. It's putting real assets like a dollar, like gold, like a house, and putting it on chain. And this is what we're seeing, not just with USDC, but we're seeing this with tokenization of properties as well, where you can own a home and the ownership or the title of that home or of your car is no longer held by the DMV or by the state. It's held on chain. So it's always available, and then there's a token attached to it. And so then when you sell your home or you sell your car, that token is transferred to the new owner, and that shows the new ownership. That effectively is what real world assets or tokenization looks like. You can also take a stock and put it on chain. So if you see, I think we're going to be talking about this a little bit later in the video, but if you see a stock of, let's say, Tesla, and that's available on a blockchain, well, that means that there's a real, hopefully, that there's a real stock that's being held in a custody account, and then it's converted into a digital form or the tokenized version of that. And so that's what real world assets are. And so this is really, I think, the next big thing. It may not be like in this cycle in 2025, but as we approach the 2028 cycle, as we see more infrastructure being laid out, as we see more companies integrating blockchain and crypto, real world assets is really where we want to take a look at. Now, this is a real world asset dashboard, every tokenized real world asset in one place on rwa.xyz. Now, on this website, it shows us where all of the real world assets are living, right? So Ethereum clearly has the most. 419 real world assets are on the chain for about $8.3 billion. Then ZK Sync Era, which is also an Ethereum, I think it's considered a layer 2, has 40 for 2.4 billion. And then Polygon, which is a layer 2, 268 real world assets for $1.1 billion. So the top three are all based on Ethereum. And all of these are interoperable with Ethereum. And so this goes back to the conversation that I've had previously on this channel many, many times. If you're investing in cryptos that are not interoperable, that don't have stable coins on them natively, these are junk blockchains. There is no way, let me rephrase. There is absolutely no way that any of the chains that are not interoperable at a very easy base layer and don't have stable coins like USDC or Tether connectivity, they're done. Period. End. No way they're ever going to hit all-time record highs ever again. And this includes many of your favorites, okay? It's really crazy that we are now at the end of the 2024 Bitcoin halving cycle, right? We're at the end of the bull run, end of 2025. And there are still blockchains in the top 10 and top 20 that have zero interoperability, zero stable coins, zero real world assets, zero connectivity to almost any of these chains here. Ethereum, ZK Sync, Polygon, Aptos, Stellar, Solana. It's just not acceptable. And there's still people who are like, but Cryptoviser, they're going to hit all-time record highs this year. They're going to hit all-time record highs. I'm like, okay, you're going to be literally waiting your entire life. It's never going to occur, ever. Cannot. Because how can you compete? How can you compete with an Ethereum, with a Polygon, with a Solana that have real world assets, that have adoption, that have banks using them? You can't compete. It's not even a competition, guys. The only people who think it's a competition are the people who hold the coins. And this is why we need to look at where the building is happening. So when we look here, what are the real world assets that are living on Ethereum right now? Well, we can see Tether is the #1 protocol. It has about, this is basically interoperated with what do you call it? Ethereum. $81 billion of Tether, $46 billion of Circle. Very interesting, Athena, which is a fairly newer blockchain. I don't know too much about it, but I know Arthur Hayes talks about it constantly. Almost $14 billion. MakerDAO, $9 billion. Securitize, $2.3 billion. Now, Securitize is interesting because Securitize brings us into this whole tokenization thing. Securitize is really the perfect example of what tokenization is. Now, I'm not saying go buy Securitize, but watch where Securitize is living. Securitize lives on Ethereum. Ethereum is the infrastructure layer. This is what Tom Lee was talking about. Securitize provides businesses a platform to raise capital from institutional, accredited, or retail investors with shares issued as digital tokens. So it's basically an IPO on chain. And you can see here, BlackRock, they have a digital liquidity fund living on Securitize, which is on Ethereum. Well. Exodus launched theirs on, it looks like Algorand. But because this is on Securitize, got it. Securitize is interoperable. Then they have a Mantle fund, but I'm really looking for the Ethereum one. Then we have a Blockchain Capital Liquid Venture Fund, a Van Eck Treasury Fund. So there's clearly like Hamilton Lane Fund. Clearly we have banks testing and using Ethereum through Securitize. You guys see that, right? And so this is, in my view, like one of the clear indicators of where investments need to be made. Again, I'm not telling you what to invest in. I'm not telling you what to do. I'm just telling you what my analysis and thesis is. If everybody is building on Ethereum, you have BlackRock utilizing Ethereum either directly or through layer twos or through interoperability protocols. They're using Ethereum at a base layer to tokenize actual money market funds. This is their institutional digital liquidity fund. This is on chain. I think you can get it on the stock market, BIDL. And so these are the chains. Like when I just look at these top chains, besides Stellar, all these other chains, in my view, are probably investable. Maybe not XRP Ledger either. I would say XRP is not investable. BNB probably not investable, and Stellar not investable. Everything else on this list I think is highly investable, especially because clearly this is where institutions are building. Arbitrum's another great example, right? We had Robinhood is using Arbitrum. Arbitrum is a layer 2 on Ethereum. Arbitrum is the number 3 protocol with real world asset counts. So why would I be investing in crypto number 892 on the market charts? Why would I be investing in that when literally BlackRock, Franklin Templeton, all of the major financial providers are utilizing some form of another Ethereum as the base layer for their ecosystem? And so these are the questions we got to ask, right? Regardless of where the market is from a price perspective, where is the building going on? Where is the money getting pumped into? And again, going back to Visa, they have a stablecoin dashboard which shows you what's being transacted. Why do you think that they're showing this? Well, they said there's a lot of noise in stablecoin data. The blockchains can be used across a range of use cases, yada, yada, yada. They said in this light, Visa wants to show how stablecoins are being utilized clearly and plainly, adjusting for inorganic activity from bots and other artificially inflated practices. Very interesting. Because effectively what they're saying here is some of the markets, there's clearly wash trading and fake trading going on to increase the metrics. But Visa wants to know what the real metrics are. And when you hear that, that's where you got to pay attention to, because that's what we do on this channel. We ignore the noise, right? I show this chart a lot on my channel, this where we are in the market cycle from a psychological perspective. And a lot of people, in my view, in the end of 2025, we are exiting euphoria. Like we're on the downtrend in the market. And people are like, Cryptoviser, I don't feel it's euphoric. I don't feel the euphoria in the market. So there's no way that we're up at the top of the market yet. It's like, well, you don't know we're at the top of the market until after the top. There's no like flag that comes out and says, here we are, guys, everybody, we are at the top of the market. No, you have to read what the market is saying and ignore the noise, right? Because there's a lot of bots. It took me a while to realize in the last cycle that a lot of the cryptos that we were talking about, namely Cardano, was full of bots, right? I don't even think I would say like whatever your view of the community is, it's half of that at least. And so there are a lot of bots that go on to social media and YouTube to create noise, make people think, oh, everybody's buying that crypto. It says it in the comments. Meanwhile, they're all bots. And we've been able to filter a lot of that out on the channel, but it's the same thing here. You know, they want to filter out the bot trading. They want to filter out the noise and see what is really going on. And you can see here, stablecoin transaction volume from 2019 to today has increased, I mean, from literally $5 billion in 2019 to just under $1 trillion in 2025. I mean, that's literally unlimited growth. Now, is it going to continue at that pace? I don't know. I think it's going to slow down a little bit. But the more they print in money, the more they want to put on chain. Because when it's on chain, people don't think about it, people don't look at it, and there's so much data noise that it's kind of hard to tell what is real, what is not. Is this fake money? Is it real money? I don't know. But again, my view is we need to be looking at the projects that are putting things on chain, that are highly interoperable, that have stable coin usage, that are interoperating with other blockchains. And not only that, that we're seeing real money. Because at the end of the day, it all comes down to the money. Because if a blockchain says, oh, all of these companies are coming to us, we're going to be number one in DeFi. And then we look at the DeFi charts and the blockchain isn't even in the top 10 and doesn't even have a fraction of what Ethereum has locked in. Well, it's all bullshit. It's all fake. And so all the comments that say, but Cryptoviser, everybody's getting, I remember in the last cycle, everybody was talking about the Nakamoto coefficient, which was a complete fake metric that literally still has no meaning whatsoever. And people were like, well, according to the Nakamoto coefficient, this crypto is highly undervalued. Well, clearly the Nakamoto coefficient is talking about forever because it never went up and got from undervalued to overvalued. It's still undervalued. And so we need to look at the real data. And the real data is money entering the ecosystem, not exiting. And right now we are seeing an exit from DeFi. You can see this on the Ethereum chain. This is the number of Ethereum in the DeFi ecosystem. And you can see at the end of this chart here, at the end of 2025, we've seen a significant decrease in Ether that's locked in DeFi. This, I think, is just the downtrend of a overhyped market and people taking profits out and readjusting where they're putting their money. I would also imagine some of the DeFi is moving into stable coins. Some of the stable coins are moving into layer twos. So Ethereum's dominance in DeFi is still there, but it's decreasing because I think it's going to get spread out a little bit more in the bear market. But that's a great opportunity to look and say which ecosystems are growing, which ecosystems have built the rails, built the foundation for DeFi. Well, Aave has now launched Horizon, which is basically a new real-world asset market. So this happened again in September 2025. Aave's real-world market Horizon launches. Aave Labs launched Horizon, a new lending market on Ethereum where institutions or other qualified users can borrow stablecoins against real-world assets. Horizon launches with a network of leading institutions across tokenized assets and stablecoins, including collateral from Circle, Superstate, and Centrifuge. The network also spans Ant Digital Technologies, Chainlink, Athena, Cow, Open Eden, Ripple, Securitize, VanEck, and WisdomTree. So you can see a nice mix of different crypto ecosystems and also traditional finance ecosystems. This is where it's at, guys. And Aave has definitely been a very interesting crypto. A lot of volatility this cycle, a lot of movement, a lot of interest from the likes of World Liberty Finance and other institutional players like we just read. But Horizon changes the real-world asset market by enabling real-world assets to serve directly as collateral within DeFi. Institutions can unlock stablecoin liquidity against their tokenized assets without needing to sell or redeem them, turning real-world assets into productive building blocks with on-chain finance. For stablecoin lenders, Horizon provides access to new on chain yield opportunities from a new risk profile. The result is a market that combines real world assets with DeFi, making them productive and integrated into DeFi. So, how does it work? Well, qualified users start here, and then you can borrow or supply more liquidity on the market. Then you have real world asset pools, other pools, stablecoin pools, and liquidity providers. Built on Aave, Horizon is designed to meet regulatory requirements for permissioned real-world assets. It operates as non-custodial lending infrastructure where borrowing and lending are executed automatically through smart contracts. It's built for two types of users. Qualified institutional users can supply real-world asset collateral and borrow stablecoins, while anyone can supply stablecoins to earn yield from institutional borrowers. And so again, in traditional finance in the banks, you can't make any money on your deposits. In real world assets, you can. And again, this is incentivization. They're incentivizing you to move from TradFi into DeFi. That is the key to me that says the banks are going to move on chain because they want the money also. They want the yield also. So this is a quick overview of how borrowing works. You guys kind of understand how borrowing works. This is how lending works. You can pause the video right here if you want to see it. But these are the launch partners. Horizon includes real-world asset collateral options from Superstate and Centrifuge. Circle's USYC will also be added soon. Stablecoin lenders can supply GHO, RLUSD, and USDC. RLUSD is Ripple's stablecoin. So, yeah, this is Aave utilizing multiple different ecosystems and launch partners into this real-world asset tokenized ecosystem. And Horizon also adopted Chainlink Smart Data. And this brings us to Chainlink because Chainlink is a huge beneficiary of everything that's going on in tokenization right now. Now, before we go there, I just wanted to show you this. China property developers say that they're exploring real-world asset tokenization. And so we're seeing the acceleration in the US. And I mean, we know that a lot of it is because they don't want other countries to get ahead. And the more stories we see like this about China doing, getting into it or exploring it, the more we're going to see the US doing this as well, at least under this administration, because it does seem like they understand that the US needs to do things differently. Otherwise, it's not going to be looking good in the future. And again, remember, the boomer generation, they're kind of starting to move on. And they were called the boomer generation for a reason because there were so many of them. And they did not have as many kids as their parents did. And that generation didn't have as many kids as their parents did. So everything that we're hearing about from Elon Musk and things like that, about population collapse, like these things could be real. And if there is a population collapse, that means that there's going to be more dollars in fewer hands. And there's also going to be a huge, bigger disconnect as they continue to print more and more and more money. And so they're purposefully exiting the old system by printing and printing and printing and printing and printing. And the only way to offset that and protect your future, your financial freedom, is to offset that inflation printing and put it into assets that are going to bear yield or grow over the course of time. And the majority of people are not doing that. Majority of people don't see this. They don't even know what tokenization means. We're also hearing SBI Group is tapping Chainlink to tokenize real-world assets in Japan. SBI Group, one of Japan's largest conglomerates with assets exceeding $200 billion with a B, has formed a strategic partnership with Chainlink to speed institutional adoption of digital assets in Japan and other key markets. How can Chainlink not win by having all of this? Chainlink Endgame, the industry standard Oracle platform, providing all the critical services needed to unlock tokenized assets and on-chain finance at scale. And you can see the Chainlink stack. All these blockchains are connected. Aave, Camino, Lido, Compound, Solve, Lombard, Jupiter, GMX, Pendle, and many more. But there's a lot that are not connected in Chainlink. I did a video the other day. I actually may have it in this video as well. I don't. But basically, Chainlink has something called the Chainlink Interoperability Protocol, CCIP. And CCIP allows, interoperability between multiple different chains. And there's still chains in the top 10, top 20 that have no interoperability, let alone a Chainlink connection. When you connect to Chainlink, when your chain connects to Chainlink, you have access to all of these other blockchains. All of these financial firms, Swift, JP Morgan, UBS, SBI, MasterCard, Bank Colombia, ANZ, Apex, and Euroclear, among many others. This is the end game for Chainlink. And they have the President of the United States, the Treasury Secretary of the United States on board with what Chainlink is doing and having meetings with the Chainlink founder, Sergey. So in a bear market, if Chainlink goes down 50%, are you going to buy? These are the answers. The US government and Chainlink are now bringing government macroeconomic data on chain. The Department of Commerce is going to be publishing real GDP, personal consumption expenditures, price index, and the real final sales to domestic purchasers on chain moving forward. And this is probably going to be expanded to other government data as well. And Chainlink also is doing more, from off-chain revenue to Chainlink Reserve to on-chain revenue, institutional adoption to off-chain deal revenue to Chainlink Reserve. This is what they're doing. And Chainlink is holding their own coins in a reserve and this is what we're seeing not only with the companies like Ethereum strategy companies or Bitcoin treasury companies, but now the actual blockchains are holding their own reserves. The Chainlink Reserve is a strategic reserve of Chainlink coins, funded via revenue from various off-chain and on-chain sources. And they just started this, which I think is really smart. They started this in the bull market, and they're going to continue it through the bear market. And then in the next bull market, hopefully they're going to have enough with the price increases where they're going to be able to maybe deploy some of this and add more services or more features or more functionality. Meanwhile, you have other ecosystems out here in blockchain that have no interoperability, no Chainlink connection, no stable coins. And what are they doing? They're draining their reserves. They're draining their treasury. And they have nothing to show for it. So as we move forward, we need to be looking at all this data, real world asset, tokenization, government usage of these chains, interoperability. And these are going to tell us which cryptos we need to buy, which cryptos we need to hold. But more importantly, it's going to tell us which cryptos we need to ignore. Because the bots will tell you, oh, you got to buy this crypto. Everybody's buying this crypto. But nobody's actually buying that crypto. Because nobody's using that crypto, because it's not connected to anything and has no demand usage, because no stable coins are implemented either. And by the way, there's a lot of different blockchains that are like this. So this will tell us where we need to focus, where we need to put our money. And most importantly, where the money's flowing. Just look at the stable coins that are deployed on these different chains. Billions and billions of dollars. And just the stable coins issued natively on these other chains is more in dollar amount than the entire market cap of most of crypto and most cryptocurrencies' individual market caps. And so the market outside of the top blockchains that actually have interoperability, government use cases, tokenization of real world assets, the ones that don't have this, they're useless. They can promise us the world, but at the end of the day, this is like what I do on the channel. Like, I analyze these markets, and there's only one indicator whether I'm doing good or bad, and that's whether my thesis is accurate based on the market. The market doesn't care who's right or wrong. The only thing that matters is that you're right. And when it comes to these blockchains, it doesn't matter what these blockchains are promising or saying they're going to do or saying, oh, just a little bit further down the road, we're almost there, we're the next release, don't worry, it's coming, we just need a little bit more money, a little bit more time. Either you deploy or you die. That's how these blockchains have to operate. Deploy or die. And personally, we've seen a lot of blockchains that are effectively already there, but the price hasn't caught up yet. And it will. It will. And that's why I think there's a lot of cryptos that are highly undervalued because they have real world assets. I mean, going back to the real world asset chart, the number Polygon, undervalued. ZK Sync Era, undervalued. Aptos, undervalued. Arbitrum, probably undervalued as well. Mantle, probably undervalued as well. Especially these are in the top 10 in terms of actual networks with real world assets already on chain. And imagine where we're going to be in 5 more years from now through another cycle, through more banks, more institutions, more companies, more real estate, all being tokenized. But what chains are they going to use? Are they going to use the chains that have already deployed this technology or the chains that haven't deployed any of it? That's where we need to invest. That's where we need to focus. And that's what we need to keep our eye on. Now, in terms of when to invest, obviously, when we look at the psychological market chart, we want to invest at the bottom. And I think it's going to come. It's just going to take a little bit of time. So patience is key. Anyway, let me know what you guys think about Ethereum being the base layer for the entire blockchain infrastructure ecosystem, real world assets, tokenization, and the cryptos to buy and the cryptos to stay away from. Let me know your thoughts down below. Don't forget to give the video a thumbs up, hit the subscribe button, and I will see you when I see you. Invest responsibly, do your own research, and crypto on.